Welcome, ladies and gentlemen, Precious Metal Summit here in Zurich, and now we're here with me is Alexco Resources, Clint Naumann, the CEO, and he wants to give us an update as it is exactly 1 year when we met us last time. Good morning, Clint.
Good morning, and it's great to be here and great to let you know what we've been doing for the last 12 months.
Exactly. So what were the highlights, I would call it?
So over the course of the last year, we've done a significant amount of underground work. We've driven about 900 meters of underground development into our Birmingham and Flame and Moth deposits and or towards those deposits. We've done about 5,000 meters of underground drilling. We have announced a new resource for the Birmingham deposit. And a year ago, when we were talking, that deposit had about 23 million ounces of silver at an average grade of around 620 grams per ton silver. And that comprised maybe 17 million ounces in the indicated category and 4 or 5 in the inferred category. In 2018, with all of the work that we've done on that deposit now is 33 million ounces of silver at the same grade, more than 600 grams per ton, with another 10 million ounces of silver in the inferred category. So in all categories, that Birmingham deposit now is more than 40 million ounces, starting from nothing a couple of years ago. So a great discovery, very high grade, and now with underground access, established and ready to move to production.
Fantastic. I think it's also important that, let's say, the high grades are continuously going on, right?
Exactly. So the grade has not changed, and so this additional. The original size of the deposit was around 800,000 tons. Now it's 1.6 million tons. It almost exactly doubled, and the grade did not change at all. So all this new material that we've found is exactly the same grade.
Fantastic.
And of course the mining, the grades once this material is mined will be higher than the resource grade because it'll be mined selectively. Clearly. So it's that's a. It's a great step forward for the company. We're in the process of trying to wind up a pre-feasibility study. Unfortunately, right in the middle of the engineering, we doubled the size of the resource, and so the engineers had to go back to square one.
Honestly, it could be worse.
Good news. So that work will be completed probably December, January of this year. Then we'll make an actual production decision.
Okay, super. So that means, like 2019 is then the real big year with the production decision?
So once we made that decision, it's probably only 5, 6, 7 months to hit the production.
Super. And I saw in your presentation still the capex is something like 27 million. Let's call it 30 million.
Right. So we won't know exactly what that capex number is until we finish that pre-feasibility study, and it'll certainly be driven by the amount of underground development we do with these much larger deposits now. So. A little bit, there's a little bit of uncertainty there, but the numbers are going to be generally in the same area. It's not a capital-intensive project by any means.
Yeah, fantastic. And I saw also in your presentation there was AIC projected like $9.50 for I think for the first 3 years and $10.50 afterwards.
Right.
Do you expect significant changes?
I don't think so. I mean, it's mostly driven by the fact that this mine should produce 3.5 to 4 million ounces of silver per year, and that's your denominator. So that's the important number, and I don't see that there should be a lot of change in that number. But once again, we won't know until we get all of these plans put together. For these larger deposits, try to optimize the entire plan and just to see where we end up. So.
Yeah, absolutely. And you have also some byproduct credits, right?
Yeah, lead and zinc. We produce. A significant amount of lead concentrate as well as zinc concentrate, and most of our silver reports to the lead concentrate. So, and it's more that's the best place for your silver to end up. So,
absolutely.
So
that's perfect.
So it's good.
Yeah. So, what I also derived from your presentation, I found that really interesting because let's say we talk about $30 billion. I'm saying that, not you. Yeah. So let's say it costs 30 million. You have over 20 in the bank, but you are also getting constant inflow from your environmental division, I would call it, and you have undrawn credit facilities of approximately 15 million. So it looks to me like that you really can self-finance
so
into production,
we're sitting in a pretty good place. in my view. And we have been investing, some of that 30 million you were talking about. Over the course of the last 9 months to a year, we have been deploying that capital, developing these underground deposits. So. At this point, they're probably 65 to 70% of that work is already done.
Super.
That money's spent, so the actual capital in front has declined, proportionately.
Okay.
And then on you bring up the environmental company. It's
that would be my next question. Yeah. So what's going on there?
Continuing to grow.
Yeah.
That company is have 4 or 5 offices now spread across Canada and the U.S. and taking on a lot of additional work. More than $100 million of contractual backlog in that business, and I would expect that number is going to increase here, in the near term.
Yeah, so I mean that is adding like 3 to 5 million per quarter.
Yeah, it varies, but
right?
it keeps the lights on
exactly.
for sure.
Yeah, and you must not dilute. That's important.
Exactly. Yeah. No, it's an important part of the business, but I mean it's also strategically important. You should not sort of overlook the fact that we ended up acquiring the Keno Hill Silver District as a result of being willing to shoulder the cleanup responsibilities for that district. So we're always looking around for similar types of opportunities where you have a valuable asset that's hidden behind some environmental challenge that we feel comfortable in handling, and not that we like to shoulder risk, but we have a lot of expertise in that business, and they're very good at what they do. So
fantastic.
So we'll continue to grow.
Very good, very good. Last question. I think the pre-feasibility study is key for the production decision.
Correct.
Let's assume everything goes fine from here. What is it, like 6 months, maybe?
Yeah. So once we get that pre-feas completed, we'll probably make a decision pretty shortly after that.
Yeah.
Then it'll be somewhere between 5 and 7 months, 5, 6, 7 months to reach the production.
Oh, wow. So you're not doing a feasibility study. You go from the pre-feas directly in production?
We'll see what comes out of this pre-feas. But a lot of this underground work we've done around these very high deposits, very high grade deposits like Birmingham. I mean, those things are drilled at 10-meter centers now, and so
wow, that's really tight space.
Yeah, exactly right. But it's a very high grade deposit, it's very valuable ore. So you need that kind of detail, and you need to be very careful with the engineering to make sure that you extract the maximum value. So we feel pretty comfortable with the level of the work that we have presently.
We could say, like, worst case scenario, definitely 2020. If assuming everything goes the way you want it, you are definitely in production.
Yeah. I mean, that's what we're hitting. That's the entire focus of the company is to move that district back in production.
So then we have the first primary silver producer in the Yukon.
Exactly.
Right?
In Canada, it'll be the only primary silver
Canada
producer.
even. Jesus
the only
Christ.
Silver. So not too many companies left in the world that are primary silver producers.
Yeah, and we need a lot of silver because of the solar.
Exactly.
Definitely.
Yes, exactly.
Fantastic. Maybe one comment from your side on the silver market.
There's nothing I can do about the prices, and
That's right.
I can control costs.
Yeah.
I'd like to think that the silver market is consolidating, and we'll just have to see what happens in the future. As you mentioned, there's increasing industrial demand.
Yeah.
But at the end of the day, in my view, it's still the speculator that's driving the ultimate price of silver.
Yeah, and also it looks to me like, I mean, we had over 1 billion ounces in the last, let's say, 10 years we had in the storage.
Right.
But it looks like they are gone.
Yeah, so so people are on both sides of the silver deficit question, and I think the market is close to being in balance in my view. So the ultimate price driver, like I say, is the investor or speculator that sits in that top 150 million ounces on the supply demand curve.
Yeah. Super. Fantastic. Clinton, all the best for that. We look forward to some good news.
Yeah.
And I would say, hey, please do it because we need much more silver in this world.
Thank you.
Thank you very much.
I'm going to do our best. Thank you.
Great. Yeah, ladies and gentlemen, that was Clinton Omand, the CEO of Alexco Resources. And you heard it on full pass, full throttle on the way to production. And the guys are doing now the pre-feasibility. Everything looks so far really, really well. They have almost doubled the resource again. At least the tonnage was doubled, sorry. But the ounces prices rose by over 50%, that to mixing up here the numbers. And the company has a lot of cash in the bank. They have the cash to really go in production, and they have a constant inflow of cash from their environmental division. I think they are very well set up to be the next primary silver producer, or the first primary silver producer in Canada. So check out the company. Thanks for watching us. Bye-bye from Zurich.